All right, guys, so we've got Michael Storm back in here on video format. So we spoke about a particular trade he took on the Euro Aussie, and it just went skyrocketing in the podcast. And we're going to quickly go over with Michael here today on the chart so you guys can actually see what he was talking about. So if you want to find out a bit more detail, you can probably jump into the pod. If not, just keep watching here. We're going to go through that trade and possibly a couple of others. So over to you, Michael.
All right, great. So this was the day in question. If you remember, this euro odd shot up like mad, a couple of hundred pips in one day. And the reason the trade, shall I say, turned me on so much is that because, it ate up in one day, it ate up 8 days worth of movement. And I saw that on the 1 hour charts, and we were looking at it in our trade room, and, we were pretty interested in shorting it. So the reason is that we were up into the 786 fib, the 886 fib, and we love to use those fibs. I find those are some of the highest quality fibs out there. And in reference to the bullet theory that I was talking with you about, we were adding shorts like pretty much right up here is where we started our first short. And if you notice, I'm on an hourly chart, so you won't really be able to see this that well, but there were movements up, and we're trying to capture the top, basically trying to build a position in. And every time it set up really nice northern burst and made like 1 minute great burst to the north, we're trying to capture it. And there were 5-minute sells. See, I can't really, it's been a while now since that happened, but right over here, if I scrunch my chart up really well, you can see we started to pile in somewhere around the 158. I think it was 159.85, and then we took more at around 160, and we figured on 160.12, and I don't think we captured the top, but by the time this whole move was done, we had like 6 bullets on the short side. Okay, and so we just waited because I feel like, Forex traders have to mix with patience. They see something out of control. They see something in complete euphoria where, obviously all the bears are throwing in the towel. They're just puking. And so we were taking the other side right up in here where I'm circling my cursor. And then slowly over time, it took all night long. We came back down. We bailed somewhere down here at support, I think 1 hour. If I go to 1 hour chart, it'll probably show it better. Oops. Somewhere down, probably right around here, the moving averages and the support level. So all in all, I thought it was a good trade. It didn't pan out immediately. We had to wait all night for it to happen. We were waiting for that to break, waiting to get back down here. And obviously it went a lot lower, so it would have been nice if I held on, but I didn't know that it was going there. That was the issue. At the time, it certainly didn't look like it was going to go that far,
And did you have like sort of a get out level, which was like, okay, this is not going to happen. I'm out. Did that sort of exist?
No, it didn't happen to us right away. No, because we were really thoroughly looking at this daily with this monster bar into the 786, 886 fib level. And I think, I probably would have gotten nervous, if it had continued to blow through, if the price had gone up, say, the next day and started to rock higher and went through the 100% level, then, I obviously wouldn't have felt very good about that. I would have had maybe 7 or 8 bullets on, and I would have been pretty much underwater. And at that point, we engage in something completely different, which is a washing strategy, where we take a short, we wait for it to come down, we'll book a trade. Hope I'm okay here. My internet keeps going out on me.
Yeah, you sounded a bit fuzzy there for a second, but it was all good.
Yeah, all right. Sorry about that. I'm having some internet issues today. I don't really know why. But anyway, so if that occurred, we might have to capture like a 7th or an 8th or a 9th bullet short. We'd wait for it to fall, and then we'd take off like a micro lot of loss. So we might, I don't know, we might make like maybe $15 or something and then lose 5, and that would have to be repeated often to wash our way out.
Right.
So with 6 bullets, that's 30 micro lots. I mean, it's not much fun washing 30 times. There's no joy involved. When it happens, it's a real pain. So I'll just say it's not fun.
Cool. And
Okay.
can you remember the other pairs that we spoke about in the show?
Yeah, I do remember. We were also looking at the U.S. Canada, you and me, and this is the point in question over here where the 15-minute buy really kicked in. But I was already long somewhere over here. I had one bullet. I had another bullet over here somewhere. I had two of them. And when it dipped this far, I was just a little bit underwater, but there was only two longs, so I wasn't even remotely nervous or sweating at all. And when this 15-minute buy happened, I thought I was going to be really keen and just bid on the 1-minute charts. I probably bid like 5 or 6 pips under the market and never came down, never filled me, never got my third bullet, and it just took off running like crazy.
Yeah,
And
yeah.
so we exited. It was it was yesterday, so it's a little hard for me to remember. I think we exited somewhere over here, and I was obviously, again, out too soon, and so some people say, you've probably heard it before, you never go broke taking profits. Well, there's a little bit of truth to that, but then there's also the other side where, yeah, if you take profits too early, you also kind of cut yourself a little bit because you're not maximizing the trade.
Yeah.
And I get that all the time. I'm constantly in too soon. I'm constantly out too soon. I try not to beat myself up over it, because I'm more of a scale in and scale out guy. So I'll try not to criticize or fault find too much. But, it is a problem, I will admit. You never really know how far something will travel.
Yeah.
So
And so,
that's
so
the way
what
it
was
goes.
the sort of key identifier for you to like say, oh, okay, well, let's get out of this one.
Well, really, we were just looking at the daily at the time when we first started to get long, and we saw it coming down in this big red bar right here. And again, we were approaching that 786 fib level that we like to trade off of, and the 886 as well. And if you look over here in the daily chart, this is where the original daily buy happened right here. So we were just remembering that. We think price has memory, and that if we returned here, this would be a good place to get long again, or at least start to dip our toes in the water. So that's how we were thinking at the time. And let me see here. Am I on 4 hour? Yeah. Okay. So we just look back here, and you can see it. This is where the daily turned. This is a 4 hour chart, but you can see like an inverted left shoulder and a head right here,
Yeah.
and a right shoulder, and then this right here would be the neckline, and we broke out and went crazy high. So I'm thinking a return to this level was good. And one of the other things I talked to you about was the stochastics, how we use those, and they were really buried, which was really nice.
Right.
Yeah.
Okay, cool. So there's
During
a
one of your Oh, I'm sorry. Yeah, during one of your questions yesterday, you had asked about, if there was one strategy that I would recommend, and I thought more about that today, as a matter of
cool.
fact. And to answer that even better, I would say that if you can just wait until 4 hour charts look like that, okay, and think short, and if you can just wait until 4 hour charts look like that, and you start to think long, you're probably going to be okay. And then you just wait until they look like this again, and you're smacking up against, terrible resistance, right? Because we use everything together, resistance, candlesticks, stochastics. I mean, these are, in my humble opinion, these are great places to be, placing a trade is when stuff looks like that, or like that, or again, like this, just the 4 hour charts are so good, they work really, really well for me. And they're my number one favorite chart to use is the 1 hour and the 4 hour,
And what do you say about people who sort of slag off the likes of the stochastic indicator and these other oscillators out there that have been around for ages? What are your sort of thoughts?
Okay, well, there's a lot of different indicators, let's face it. And I mean, I think your Forex broker would really prefer that you use a whole bunch of them because most of them don't work. I did talk with a dozen bank traders maybe, I think it was about 8 years back, and we had a whole day together, and I got to interview a dozen of them for like 8 hours. It was really nice. And they had every single one of them unanimously, hands down, recommended 10-3-3. And you'll notice I have mine set to 8-3-3.
Yeah.
I tried the 10 and I tried the 8 together side by side, and I just didn't, for a couple of weeks, I didn't notice any difference at all. And, to me, it just seems that this closely matches price and time. So I've been using this for a really, really long time, and I find it extremely accurate that the market is always just, the market itself is a great big giant oscillator, constantly going up and down between strength and weakness, and this closely matches time and price, and it helps me, to see very clearly. So I like it a lot, and I use it on every chart, everything, even the 1 minute, 5 minute, you name it.
Brilliant. Well, look, thanks for coming on again, Michael. This has been really good to see your actual charts, and obviously put some context to the podcast. So I'll be able to let the guys know that are listening to the podcast to jump over here and check it out. Is there anything else you want to leave the listeners with? Maybe how they can contact you again?
Oh, yeah, that's at michaelstorm.org.
Okay, guys.
michaelstorm.org.
Head over there, and I'm sure you'll learn some more of Michael's tricks. So that's it for this video, and we'll see you in the next one.